S&P 500 and Nasdaq hit record highs. Deckers surges on UGG demand. Here's the thing. Markets don't always make sense. Take today's record highs for S&P 500 and Nasdaq. They're surging despite economist Thomas Martin warning Wall Street has more room for disappointment than upside if rumored trade deals falter. So where's this optimism coming from? Let's decode the day's biggest moves in plain language. No finance jargon, just clarity. Trade deal hopes fuel rally. Wall Street loves a good story. And the promise of resolving those US-EU trade tariffs became today's talking point. European Commission President Ursula von der Leyen's Sunday meeting with Donald Trump stirred commodity-driven sectors, though even Trump called the chances 50-50. This tension invites a crucial question. When markets price in potential deals, does that set us up for relief rallies or future pitfalls? Martin suggests the latter. Hold that thought. Deckers Outdoor Uggs crossed the pond. While big tech struggled, Deckers Outdoor Deck rocketed 11% after exceeding expectations. Why the surge? Their Hoka sneakers and UGG boots found traction in China and Europe, a rare example of American lifestyle brands succeeding abroad, despite broader geopolitical tensions. This raises another point. Could global consumer brands inadvertently serve as economic peacekeepers? Intel's slide reveals tech worries. Not all tech heavies had a good day. Intel's INTC shares tumbled 8.5% after breaking new bad news items, larger than expected quarterly losses, and plans to slash more jobs. For new investors, this begs the question, are job cuts always negative? In this case, yes. The deeper losses signaled ongoing manufacturing missteps despite layoff attempts, casting doubt on the company's recovery timeline. Mergers and hikes, Paramount plus Skydance, regulators approved their $8.4 billion marriage, but shares dipped 1.6%. Investors might be asking, does merging with Skydance Media really boost Para's streaming prospects, or is this deal a risky overreach? Centene's turnaround tease. Health insurer Centene's DNC rose 6.1% on promises of improved profitability in government-backed insurance plans by 2026. To clarify, Fentiar focuses on Medicaid and Medicare Advantage. Their stock bump suggests they're convincing investors that cost-cutting and operational tweaks will translate to real gains. But here's the debate. Can for-profit insurers ever fully stabilize these complex programs? Fed watch next week. While markets celebrated new peaks today, S&P at 6,388.64, Nasdaq at 21,108.32, all eyes turn to Thursday's Federal Reserve meeting. CME data shows about a 60% chance of a September rate cut. The real cliffhanger, Trump's recent Fed criticisms and Powell's potential response. Markets hate uncertainty. So will Powell stick to data or respond to political pressure? Casualties this week. Charter Communications CHTR tanked 18% as broadband subscriber losses accelerated. Why? Wireless carriers now bundle 5G mobile with high-speed internet, a one-stop shop that's siphoning customers from traditional cable. This highlights the hidden competition in tech infrastructure. It's not just streaming wars anymore. Controversy corner. Perfect week hype? The S&P closed at new highs every single weekday, a feat last achieved in November 2021. Cynics might say the index coasted on tech dominance, plus 7.7% earnings growth expected. Optimists counter that materials and industrials also surged, signaling real economic activity. Let's spark debate. Does this rally reflect actual economic strength or speculative fervor? What investors should watch? Next week's Fed decision comes with stakes. If trade deals advance, lower tariffs could ease some inflation pressures, but what if they stall? The market's vulnerable position requires careful analysis. As Thomas Martin noted, careful is key. Final thought. Markets now live and die by geopolitical whispers. While this climate creates opportunities, cough, hug goods, it also amplifies risks. The real question comes Monday. When reality checks meet high expectations, will Wall Street stumble or soar? Drop your take below. We want to hear if you're dancing with this rally or head in bets. Stock market today, July 25. Dow and S&P 500 live updates and market rally analysis. Imagine waking up for a stock market that's on fire, with stocks soaring to fresh all-time highs and hopes of lucrative U.S. trade deals on the horizon. But here's where it gets interesting. Despite the excitement, some investors are sounding the alarm about inflated prices and a potential revival of the infamous meme stock mania. As we dive into the busiest week for corporate results, the S&P 500 has risen for a fifth straight day, inching closer to the 6,400 mark. The big question on everyone's mind is, can this bullish trend continue, or are we headed for a major correction? The Treasury market, for one, seems unfazed, with barely a blip on the radar after the highly anticipated meeting between Donald Trump and Jerome Powell. Meanwhile, the dollar is climbing, and the VIX, a closely watched gauge of equity volatility, has closed below 15. But what does this mean for the average investor? Should you be jumping into the fray? Or is it time to take a step back and reassess? And this is the part most people miss: the potential risks associated with risky corner of the market. As retail traders continue to pick new wagers, it's essential to consider the bigger picture. So, what's driving this rally, and can it be sustained? The answer lies in the solid earnings and hopes for U.S. trade deals. But here's the controversy. Some experts argue that the market is due for a correction, while others believe that the fundamentals are strong enough to support the current trend. So we have to ask, are you bullish or bearish on the market? Do you think the current trend can continue, or are we headed for a downturn? Let us know in the comments. As we navigate the complex world of finance, it's crucial to stay informed and adapt to changing market conditions. One thing is certain, though: the stock market is always full of surprises, and it's up to us to stay ahead of the curve. So buckle up and stay tuned for more updates from the world of finance.